Look, I always tell you that it's better to be lucky than good. And this pandemic shows us why every darn day. Because bad luck trumps management's attempts to grow or turn around. Look at Mattel. After struggling for years in the wake of the Toys R Us bankruptcy, Mattel finally got its act together, and the stock was getting real traction at the beginning of the year. It looked like 2020 would be a gigantic year for the maker of Hot Wheels, Barbie dolls, and a host of other brands. Then COVID-19 hit, and Mattel's turnaround disappeared. First, there were supply disruptions. Then toy stores were forced to close. As we saw when Mattel reported last night, they're having a really rough time. The company posted a 56-cent loss, 56 cents, when Wall Street was looking for only a 41-cent loss. Much weaker than expected sales, down 12% on a constant currency basis. Management had to pull through their guidance, although based on their commentary, April doesn't sound too hot either. We're seeing a very different story, by the way, at arch rival Hasbro, which had a decent quarter, in part because Hasbro's got a lot more exposure to classic games that you know and love. Monopoly, Life, Clue, Chutes and Ladders, and the like. So now Mattel's stock has been hammered down again today, another 1.34%. Ouch. There's only so much management can do when the environment's against you. But with the economy gradually opening, is it time to take a more opportunistic approach here? Or is this the wrong toy horse? Let's check in with Ynon Kreiz. He's the chairman and CEO of Mattel to get a clearer sense of how his company's holding up. Mr. Kreiz, welcome back to Mad Money.
Thank you, Jim. Good to be here.
Okay, so I'm a little worried because there's some classics here. Barbie, a doll that made a big comeback when you were here last, down 10%. American Girl, down 16%. These are classics. What's happening? I never thought these would go down hard, even if we're on the cusp of a recession.
Well, we entered the year strongly, and as of January and February, we were up, pacing slightly ahead of market. The decline in March was driven primarily by temporary closure of retail stores representing 30% of our sales, with retailers prioritizing essential items, and there was temporary category shift in consumer demand. But we're starting to see a change. We're starting to see a shift in demand. Total POS, this is sales or demand, normalized for Easter, is showing improvement in April compared to March, especially in the US, where in the last 2 weeks, we saw double-digit year-on-year increase and triple-digit increase online. Online retail continues to grow strongly and performed especially in the US, although not completely offsetting the decline in bricks and mortar. But quarter to date, our online POS demand in the US has increased over 90%. If the retail environment returns to normal, we expect it will be a good holiday season, but it's too early to tell at this time.
But that's very bullish. When I read most of the analyst notes and went through your conference call, a lot of it was just talking about how your supply chain, which had seemed like it had been compromised, is now better. This is a very positive story that you're telling me about a comeback that could accelerate if the economy really does, let's say, bounce back on the reopening.
Well, in spite of the decline in the quarter, you need to remember we still have very strong brands that perform very well and still resonate with consumers. Hot Wheels was up 8%. Our games portfolio, albeit small, outpaced the industry, and we actually gained market share, with Uno being the #1 purchased item in the category globally. Even Barbie, which declined, grew market share. And so we're seeing continued momentum. We're seeing strength in Fashionista and Color Reveal, and we're seeing a positive direction in April POS so far, with Barbie remaining the #1 fashion doll brand in the world.
All right, now, over your left shoulder is Hot Wheels, which is doing well, but Thomas the Tank Engine, I mean, iconic brand. It seems to have stalled.
Well, Thomas is a great brand. Just recently, Prince Harry partnered with us to do a promotion. It is a great brand that is evergreen, and we're very confident about the return to the heydays of Thomas. It is impacted now, but we launched recently a new show on Netflix, and we expect things will turn.
Now, your entertainment background, I was hoping, of course, it'd be shoot a lot of different things. It'd be terrific. But with COVID, that part of your portfolio, is it stunted? Because no one's making anything.
Well, we're very excited about our film strategy and about our approach, our mid to long-term plan to capture the full value of our IP. We continue to develop our projects in motion in the time where people were home. We actually made a lot of progress on the development side. working on the creative aspects of our projects, and we expect things to continue. Now, there's probably going to be some impact on timing because of the delay the industry is experiences in relation to production and some release schedule. But we're very much on track with a lot of excitement and momentum in our film and content strategy.
In the meantime, you think that you've preserved enough in the balance sheet to have enough liquidity if things don't turn quickly, or they go back to where they were in second half of March?
Well, we refinanced our near-term debt and now have no maturities until March of 2023. We entered the year with more than $600 million in cash and access to $1.6 billion of credit facilities. So we believe we have sufficient liquidity to effectively manage through the COVID disruption and continue to execute our strategy.
Okay, you've got a new line that I think is going to sell, which is called Thank You Heroes. Line of doctor, nurses, EMT, delivery driver, action figures. How is that going, and what will you do with the proceeds?
Well, we're very excited to be able to support communities in times of need. We recognize the role we play as a global corporate citizen, and we're looking to leverage our expertise, product, and resources to support the communities where we live. All proceeds from this campaign will go to donation. First Responders First. It's a charity organization that we're supporting, and we're really dedicated to community support through producing, also in addition to donation, protective equipment for medical professionals. We just announced 500,000 face shields, and providing grants and toy donations where we can.
All right. Well, look, I do want you to turn around. I hope those April numbers stay strong, because it could be a great opportunity. Ynon Kreiz, Chairman and CEO of Mattel, thank you so much, sir.
Thank you.
Turnarounds are hard, people, and the pandemic is making it tough for everyone. His April numbers are much better. So let's take a look. Mad Money's back after the break.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.